welcome Jaakko Kaijala, the co-founder of Nordblock. Please give it up for Jaakko.
Whoa, what a conference. Hello, everyone. My name is Jaakko Kaijala, and I'm the co-founder of Nordblock. Nordblock is a Finnish Bitcoin mining company. It started in 2016 as a hobby in my student apartment with free electricity. We quickly found out that you can't get that much power into a student apartment. Also, we had a big problem with heat. As many of you probably know, Finland is a cold country. It can get up to minus 30 degrees Celsius in the wintertime. For those who use feet and stones to measure things, it's around minus 22 Fahrenheit. So in the student village, my apartment was the only one who had the windows open all year round. Usually, heat is produced by burning stuff. You have fireplaces at home, you have a centralized boiler at home that uses gas. There are also more and more electrical boilers. But there's also these district heating networks. So in a district heating network, in cold climates, you have pipes running all around the city. There's a central heating plant that usually uses biomass, biofuels, so burning wood. From there, heat is produced and then moved through these pipes all around the city. In each house or building, there's a heat exchanger, so the heat can be reused at location. And then, again, the pipes return cold or colder water back to the heating plant, which is heated again. Water is an important aspect of moving the heat. It's much more dense than air. The energy properties are better, so it can take a lot of heat energy into itself and then dissipate it easily to the end user. At Nordblock, we first started with air-cooled machines because we were familiar with them. We were running them in my student apartment first. Then we scaled larger. We got these great containers from power mining. But the problem with air-cooled machines was that it's really hard to actually harvest the heat from the machines because we need to move the hot air into water, and there's lots of loss of heat when doing that from air-cooled miners. So, okay. We had these air-cooled miners. The next step for us was to think about how can we get this heat into a water loop the most efficient way. We tried immersion cooling, basically modified our air-cooled machines by taking out the fans, taking out the stickers, putting them into immersion oil, and that way we could actually get the heat much more efficiently into the water loop. But with immersion, I don't know how many of you are familiar, but there's this dielectric oil, as you can see in the chamber. Dielectric basically means that it doesn't conduct electricity. So you can place miners in them. It feels really weird pouring this liquid on the ASICs, but it works. Our problem was that the capex cost was much higher than air-cooled. Also, it took a lot of time and work to actually modify the machines to be fit into an immersion system. Then, in late 2021, early 2022, Europe got hit with the energy crisis. Finland was hit especially hard. We as Nordblock faced really big problems as it was really hard to mine profitably because the Bitcoin mining break-even price was lower than the energy price. So what we did at Nordblock, we started dissecting what kind of asset do we actually have? What is a Bitcoin miner? Bitcoin miner is basically a computer that does SHA-256 computations. We call these computations hash rate. Depending on what pool you mine, you get paid if there's a block found, or for example, we mine in FPPS pools, where we basically get paid per share. So these ASICs can produce revenue basically immediately when they're turned on, and the revenue cuts off when the machines are turned off. Also, the energy consumption cuts off when the machines are turned off. So the only loss when turning machines off is potential missed revenue. So with this information, we started running our machines on spot electricity price. Spot electricity price in Europe's biggest energy market, Nord Pool, basically means that each day they produce the prices for the next day. And here you can see on the blue is one of our mining containers, energy consumption in kilowatt hours. In the green, it's the spot electricity market, and in the red, it's the profitability of Bitcoin mining. So what we did was that when the electricity prices shot up, the green shoots up, our machines turned off. And then again, when electricity prices came down, we turned our machines on. And this helped us to stay in business. And we also figured out that even though we lose some uptime on the machines, we can still be really profitable with a really low energy price. This helps especially energy producers, because in Europe we're moving more and more into sustainable energy sources like wind power, and it's hard for the wind producers to not produce the wind power or wind energy when it's windy. And actually, it's really interesting here. You can see when the prices are low, it actually correlates with how much wind production is. So in this way, this flexible mining helped us survive in the business. Then we looked deeper into the energy markets. We found out that there is also volatility in the intraday markets. So if there is a situation where the forecast for energy production or energy consuming differs from the actual consumption or production, there are these volatility spikes. And with Bitcoin mining flexibility, we could gain advantage of these spikes. So what we did was that we started trading on the intraday markets. If we were successful, we got really cheap prices. If we were unsuccessful, we could just turn the machines off and even make money from the trading aspect. During the energy crisis, this is the same slide as the previous one, but we also had some locked-in capacity. So we had basically made a power purchase agreement with the energy company, and What we could do here was we had two options. We could run the miners 24/7 and get the Bitcoin mining revenue. But what we could also do was that when the energy prices shot up, we could turn off our miners and sell the locked-in portion back to the grid. So let's say that Bitcoin mining break-even was 100 euros per megawatt hour, and the electricity prices shot up to 200 euros per megawatt hour. It was more profitable us to turn off the miners, sell in that locked-in portion back to the markets, and actually get more money than mining Bitcoin. Then we looked deeper into the energy infrastructure. So electricity is an interesting commodity because you need to have the same production and the same consuming. They have to match so that the frequency of the grid stays stable. If there's too much energy production compared to consuming of energy, the frequency starts to destabilize. Similarly, if there's too much energy consumption and too little production, it destabilizes. And in the worst case, it might result in rolling blackouts, breaking of energy infrastructure. And there are different kinds of markets for this demand response, stabilizing the grid. So this heat, spot markets, intraday, and demand response, it was a complicated puzzle. And I didn't want to stay in the container, turning the machines on and off, and optimizing everything. So we tried many different mining management softwares. And now we have been using a software called Hashman. It basically takes all these aspects and integrates and automates everything into one simple software. And you can see here the green bars. You can see there's a dip there. So that is probably a situation where electricity prices are near Bitcoin mining break-even. So the hash rate drops, the miners are underclocked, and from there, if you underclock miners, you get a better efficiency per miner, and we could run our machines all the time, even though our power consumption went down on certain points of time. Bitcoin mining is also interesting because you can build modular units. You can have a half a megawatt container. You can have larger data centers, but in containerized solutions. And this makes moving the miners from one location to another really easy. Obviously, there are CapEx costs, investments into energy infrastructure to get the miners running, so you don't want to move them every day. But they can be from 6 months to 2 years at a certain location where there's maybe not enough transmission capacity built, or there's a need for a limited time off-taker of the energy. Here you can see, this is from Nord Pool. You can see that there are different price areas. Different countries have different pricing, and also inside different countries there are different price areas. These price areas come from the transmission capacity that is built between the areas. So Bitcoin mining, for example, the miners could be placed in the middle of Norway or middle of Sweden to off-take that excess energy, boost the profitability of the energy producer, and then when the government or private investors have built enough transmission capacity and the low prices stabilize or average out to the total area, the miners can be moved elsewhere. This all sounds great, But the problem we have faced in Europe is that Bitcoin mining has a really bad reputation. It's mostly because there has been so much FUD around Bitcoin mining. Energy consumption, Bitcoin basically bad, to put it into one sentence. Just today, I saw in the States, Trump wants to mine all the remaining Bitcoins there. I saw ERCOT, which is the Texas grid operator, talking positively about Bitcoin mining. I saw a state giving tax exemptions for Bitcoin miners. Unfortunately, the opposite is currently happening in Europe. There has been rumors of mining bans. Mining is not a thing that is welcome, which makes operating Bitcoin miners and scaling up really hard. But luckily, there are great educational sources. For example, the Dirty Coin documentary, which is about Bitcoin mining. It is something that is easily digestible for someone who knows the energy markets but isn't familiar with Bitcoin. Also, great book materials from Consensus Network. Even though currently it seems that watching a documentary is easier than actually for someone to read a book. People are lazy, all in all. I believe that in Europe also, the energy companies and politicians will figure out Bitcoin at some point. And then they will demand to be paid in Bitcoin. And this brings us to another aspect of the Bitcoin network, which is the Lightning Network. Lightning Network basically enables us to stream sats in real time. Energy is also streamed in real time. And currently, when you use your monthly energy consumption, you get billed the next month, maybe in the middle of it, or at the end of the next month. It's a 6 to 8 week delay from the first kilowatt hour produced for your house or business or apartment. And that's a risk, obviously, for the energy company who is producing the energy. They would rather get paid immediately, and Lightning Network makes this possible. There are companies like Synota who are working on this, and I believe that in the future, energy companies will figure out Bitcoin. They will demand to be paid in sats, and they will incentivize their customers to pay in sats, which leads to decreases in energy prices for the consumer if they are willing to pay in real time, in satoshis. And I think this will have probably as a large impact in Bitcoin adoption than the actual integrating it into the energy infrastructure. So, all in all, in the future, Bitcoin will be deeply integrated into the energy markets. All heat that can be used will be reused. The volatility of the spot markets and intraday markets will go down, which helps the energy producers. It helps the average consumer. Also, all power plants will be running at full capacity because there's always the off-taker for the energy, which is the Bitcoin miners. And with this, it will boost the profitability of energy companies, energy producers, heating companies, and it will result in an abundance of energy, which hopefully will lead us to be a type 1 Kardashev scale civilization. Thank you. All right. Thank you, everyone.